take a look now at money matters. The rand has strengthened against the dollar in early trade on Tuesday after efforts by regulators to allay fears over the global banking system fueled risk appetite. Carmen Mpelwane is with Sanlam Investments. She joins now for the very latest in terms of what is making moves in the world of markets. Very good afternoon to you, Carmen. Let's start with an overview of how the local index and rand are faring so far today.
So we've seen there's been continued recovery out of Friday's losses. So we've seen yesterday in the green, today we've come back in the green again, and this is across all the sectors, specifically highlighting the resources and the bank sector. As you have mentioned, largely fueled by fears abating around the banking sector globally, and that's given some bit of a tailwind into the start of this week.
Stats SA has published the non-agricultural employment figures for the fourth quarter of 2022. Talk to us about what's contained in the data.
Yeah, so year on year we have seen some weakness, down about 0.9% for the quarter, the fourth quarter of 2022. However, quarter on quarter we have seen a slight or marginal increase of about 50 bips. This was largely driven by the part-time employment, which on a quarter on quarter basis we saw up 4%. So that was a key driver for these numbers. Keeping in mind that over December you generally see a significant boost for part-time on the back of increased retail services, etc. So that's come through. There was a revision in terms of the previous numbers that were published for the third quarter, and those swung from a marginal growth to a marginal decline.
So according to the World Bank, the global economy's potential growth through the end of the decade has slowed to the weakest in 30 years, citing fallout from the coronavirus pandemic and the conflict in Ukraine. Talk to us about some of these sentiments.
Yeah, so we know the geopolitical tensions we've seen since the start of the Ukraine-Russian conflict, as well as the fallout from the pandemic. Had we not had both, we might have been in a different situation. But as the World Bank has indicated, we're likely to see a growth of only 2.2%, which we haven't seen in the last 3 decades. So definitely a significant pull down. As you've mentioned, the focus there has been that due to the fallout of those 2 major events, we're likely to see a struggle in terms of traction. And that's what we do expect in terms of what we've seen around the interest rate increases, which are there to tempt economic growth. So it's likely, as the World Bank has said, to the end of the decade at 2030, that we're likely to see muted growth. This would be exacerbated if we do go into a global recession. So there is room for this to be reduced further.
Storage Property REIT has posted a business and trading update. How have they fared?
Yeah, so this is 11 months to the end of Feb. They have indicated that they are seeing a normalization of their trend to pre-pandemic numbers. Keeping in mind that as they've come through, they've also said they've had significant tailwinds in terms of their occupancy levels. So in South Africa, seeing occupancy above 90% at this point. Also seeing an average rental increase of over 7% in South Africa. Similar trend in the UK for their operations. They're also seeing occupancies increase as well as the average rentals. So I think for property investment, this will be one of the better ones as it stands. They've also given some indication around their expansion in terms of development, and that continues to go in the positive direction. So no cause for concern at this point, and we saw the market react with the share price up about 2.6%.
Sanlam Investments analyst Carmen Mpelwane, thank you very much.